Hey everyone, welcome back to Corporate Decoder. Ever wonder if those companies promising to help you with your finances are actually doing well themselves? Well, today we are cracking open NerdWallet's latest report to see if they're as smart with their money as they claim to be with yours. And NerdWallet just released their report for the first 3 months of the year, and we are diving deep to see if the numbers back up the hype. We'll check out their income, how they're spending their cash, and what all this means for the future of the company. Before we jump in, if you like getting simple explanations about complex corporate documents, be sure to subscribe to the channel. We also have a Discord community linked in the description below, so come join the conversation. First things first, this is a current report, also called an 8K, filed with the Securities and Exchange Commission, or SEC. It's basically a snapshot of important events that NerdWallet wants to share with its investors. The date to keep in mind is May 6, 2025, because that's when the events in the report are being disclosed. Okay, let's get to the meat of the matter, which is the financial results. NerdWallet issued a press release announcing how they did in the first quarter, which ended in March. We will be looking at that press release, which is attached as an exhibit. Besides the press release, NerdWallet also put up a letter to shareholders on their website. This is to make sure everyone gets the same information at the same time. It is worth noting that we won't be considering that shareholder letter or the contents of their website in general as part of this report. Time to break down the numbers. We are going to look at the press release, which is Exhibit 99.1. Let's kick things off with the top line revenue. For the first quarter, NerdWallet pulled in $75.44 million as. That's a pretty big jump, about a 23% increase compared to the same period last year when they made $142.3 million is the lifeblood of any company. It shows how well they are selling their services. A jump like this suggests they are doing something right, whether it is attracting more users or successfully selling new products. Now let's look at where their money is going. One of the biggest expenses is marketing, and NerdWallet is spending quite a bit here. In the first quarter of 2025, they spent $76.22 million on marketing, which is almost half of their revenue. This is up from $60.22 million in the same quarter last year. Marketing is crucial for growth, especially for a company like NerdWallet that relies on attracting new users to their platform. But it's a balancing act because you don't want to spend so much that it eats into your profits. Here's the bottom line literally. NerdWallet reported a net loss of $8.1 million for the first quarter. Now, a loss isn't great, but it's actually an improvement from last year when they lost $14.4 million. The net income shows if the company is making money after paying all expenses while they are still in the red. The fact that the loss is smaller this year is a positive sign and could mean they are getting better at managing their costs or that their investments are starting to pay off. Let's talk about adjusted EBITDA, which stands for earnings before interest, taxes, depreciation, and amortization. It is a fancy way of looking at a company's profit without including things like interest payments, taxes, and some accounting adjustments. For NerdWallet, their adjusted EBITDA for the first quarter was $26.5 million, which is up from $17.7 million last year. This metric is used to evaluate a company's operating performance. An increase here suggests the underlying business is becoming more efficient and profitable. It also gives investors a clearer picture of how well the core business is doing. Finally, a quick look at shares. The weighted average shares used to calculate the loss per share increased from about 82 million to almost 87 million. More shares mean each share represents a smaller piece of the company. If the company is losing money and there are more shares, then each share's value can decrease even more. This is something investors keep a close eye on because it affects the value of their investment. Now let's zoom out and think about what all these numbers mean for NerdWallet. Their revenue is growing, which is great, but they are still losing money overall, even though those losses are shrinking. They are spending a lot on marketing, which suggests they are focused on getting bigger. Their adjusted EBITDA looks good, which means their core business is doing okay. However, the increasing number of shares could be a concern for investors. And NerdWallet seems to be on a path to growth, but they still need to prove they can turn a profit. The big question is, can they keep growing their revenue while also controlling their expenses? If they can, then things are looking up. If not, they might need to rethink their strategy. Alright, that's our breakdown of NerdWallet's latest financial filing. What do you think about these numbers and what they say about the company's future? Drop your thoughts in the comments below. If this analysis was helpful, hitting the like button really helps, and be sure to subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord community in the description. Thanks for watching, and I'll see you in the next video.